Ending the war in Ukraine is the best way to ensure a global economic recovery. That's according to German Chancellor Olaf Scholz, who is in Bali today for the two-day G20 meeting. Ukraine has loomed large, and earlier today, Mr. Scholz delivered those comments to a group of world leaders. Other issues on the German agenda include climate change and the lessons of the COVID-19 economic recovery. Now, before the Chancellor traveled to Bali, he visited Vietnam and Singapore for a good reason. Because German companies need to expand their supply chains, create more markets, and diversify their sources of raw materials to reduce dependence on individual countries. Mr. Scholz said he didn't mention China specifically, but it is clear he meant the production powerhouse. Many sectors of the German economy are heavily dependent on China. Here you can see Germany's direct investment in Asia. In 2010, direct investments in China made up a third of Germany's investments on the continent. 10 years later, that had surged to almost half. Now, in the same time frame, investments in Southeast Asian nations decreased. The biggest countries of the 10-nation ASEAN trade bloc include Indonesia, Malaysia, the Philippines, Thailand, and Vietnam. German investments in Japan have also been falling, down almost 50%, while investments in India, a regional giant, stagnated. And it is the same with South Korea. Before the G20 meeting, the leaders of the world's two largest economies, U.S. President Biden and China's leader Xi, met on the sidelines of the summit, where they tried to set what they called guardrails for future conversations, including red lines both nations wanted to adhere to. All right, for more, let's bring in Trinh Nguyen. She is with French investment bank Natixis, and Shirley Shi, President, Southeast Asia, Australia and New Zealand at chemicals firm Evonik. Both to you. Shirley, let me start with you. Your company's website lists at least 8 production sites in mainland China. How do you expect this number to change as the German government is urging companies to focus on countries in Asia that are not China?
Let me just explain a little bit about our production sites in China. Yes, we do have numerous sites of production in China, but those products which was produced there are mainly served the market in China or in the Asia-Pacific region. Without mentioning that we have also the production sites outside of China, almost at the same size within Asia-Pacific, we still import quite a lot of products from Germany to China.
Trinh, over to you. Mr. Scholz is eyeing Vietnam and Singapore for increased cooperation. Vietnam has been the preferred destination for companies that are pursuing a China plus one strategy. What is it that they get there?
First, I think both Vietnam and Singapore have something that other countries don't have, which is the EU FTA, right? With that, you have reduction of barriers to from tariffs, but also facilitation of investment. And for Vietnam, it is next to China, and it has comparative wages. It has comparative trade policy. China does not have the EU FTA. So obviously, if you want to invest in China to capitalize on the Chinese market, that's perfectly fine. However, if you want to use that to export to other third markets, for example, the U.S., that is increasingly challenging because of tariffs. And also, as a result, because of this favorable advantage that Vietnam get because of the geopolitical the tailwinds, a lot of investors are increasing, right? Not just, we're talking about German, but really mainland Chinese investors are investing more because they want to be able to, from Vietnam, access the European market as well. So Vietnam competitiveness is its liberalization, and it's a neutral country for other countries to operate. And I think that increasingly will be very attractive for Germany.
Shirley, back to you. Your company does have production sites in Vietnam and in Singapore. You say that those production sites in China are mainly for the domestic market there. All right, fair enough. But are these places in Vietnam and Singapore are going to get more business now because Berlin would like that?
I would say so. Yeah, we do have quite a lot of discussion in terms of putting more production sites in this region I call ASEAN. We do have also a lot of production sites already in this region, especially in Singapore. In our industry, we need also the total supply chain were established when we put in production there. So we basically more focused on in Singapore and in Thailand. Yeah. So basically, we also try to utilize this diversification of the supply chain to serve the whole region of Asia Pacific.
Shirley, you mentioned that the production sites you have in China, that they actually import steel from Germany. Now, that could become a problem should international sanctions bite in the case of a Chinese attack on Taiwan. How big of a problem would that be for you?
We use our Chinese production sites to serve the domestic market mainly. What I mentioned that we still import from Germany, it's not the raw materials for our production sites in China, but we still have a gap for the domestic market of the finished products, which we are still producing currently in Germany. If the worst scenario, like what you just mentioned, happened, then for us, it's just a decision if we want to further serve the market potential of the growth in China by investing more in China, or we say that we just maintain the current status.
Trinh, back to you. I mean, Beijing has become increasingly aggressive in its rhetoric towards Taiwan. It wants to, quote, reunite Taiwan with China, not outruling force. How do you rate contingency plans of companies that are present in China?
I think the Taiwan question is one that's hard to say. When is it going to happen, whether it will happen? One thing we know for certain is that the geopolitical risks are there. And, you know, even though President Biden and President Xi had a good meeting in G20, what's very clear, if you look at the actions, you know, have been more aggressive beyond just tariffs into investment curbs. Now, on top of that, one of the risks beyond geopolitical risk is really about China itself. China domestic demand has been one of the strongest, fastest growing. It's a huge market, too big to ignore. That said, the suppression of zero COVID, which everyone hopes will be released, highlights the fact that if you have all your basket in the China market, you need offsetting factors, right? Companies that have done well have other markets that have grown. On top of that, there's a supply chain issue, right? We just talk about geopolitical, but also, again, China has 20% global market share. For Germany, China is very important as a place in itself to sell products, but also in terms of supply chain linkages because it imports a lot of products from China itself. So I think too much concentration risk is never a good thing.
Right.
Whether or not Taiwan happens or not is a big question mark. But we know for certain that it's very clear that globally, everyone is hedging their best, and it's very good to diversify.
Okay, I have to leave it there. Trinh Nguyen of Natixis and Shirley Shi of Evonik, thanks to both of you.